Hello, this is David Kearns on the Money Core trading floor on Friday the 26th of March, bringing you your weekly commodity currency market update. This week we have seen more of the same theme in the currency markets, with the pound feeling the strain against the commodity currencies. Sterling managed to cling on to levels just above the recent lows seen against the Australian dollar, with not much movement either side of 1.64. Against the New Zealand dollar, sterling fell to yet another new low, with the level of 210 broken earlier today. The Canadian dollar continues to strengthen, with expected interest rate hikes on the horizon, helping to stimulate demand for the Canadian dollar, commonly known as the loonie in the FX markets, with reference to the bird shown on the old dollar coins. We saw sterling against the Canadian dollar trade at new lows, seen below 1.52. It is not hard to understand why sterling is currently one of the weakest performing currencies. This week we saw the UK's Consumer Price Index, which is used to measure the cost of goods and services, dip from 3.5% recorded in January to a level of 3% for February. This figure was certainly in line with the Governor of the Bank of England's earlier predictions of falling inflationary pressures, which should hopefully allow the UK interest rates to remain at their historically low levels, which will help stimulate much needed economic growth. We also saw Alistair Darling's budget release on Wednesday, and this did little to help the pound. Although he was able to predict that this year's budget deficit will actually fall from £178 billion to £163 billion, this still paints an appalling picture of just how bad the government's financial predicament remains. With the UK's growth forecast for 2011 and 2012 marked down by the Chancellor, there was very little to cheer the pound. Over in Australia, there was very little data out of Australia at all last week, and we were left to ponder the comments from the Reserve Bank of Australia's Assistant Governor, Philip Lowe, in which he painted a picture of an ever-improving trading environment with their Asian neighbours. This in turn will feed demand for property, driving up prices. With unemployment over there also falling and labour costs rising, Australian interest rates will go up again from their current accommodative levels. From the New Zealand dollar has also remained strong. They released a rather healthy fourth quarter gross domestic product figure of 0.8%, which helps highlight the overall value of goods and services produced. We also saw their February trade surplus widen further. Rising commodity prices and strong demand for farm produce has seen exports continue to rise. Over on stateside, we've seen the Canadian dollar continue to strengthen against the pound, whilst it becomes clear that the Bank of Canada's Governor, Mark Carney, makes it known that whilst the current record low interest rate of 0.25% is okay for now, the recent faster than expected rise in inflationary levels will mean that it will not be long before they start to move and raise interest rates higher. With strong gains in manufacturing and retail sales of late, their economy appears to be rebounding well from last year's recession. Unless we actually see an unexpected wobble in global trade, for the moment at least, it is likely to see that the commodity currencies will continue in their current strength, whilst the UK's political arena is definitely dominating investors' views on whether or not to hold sterling. For further information and to contact us, please visit the emigration pages on our website, www.moneycore.com/emigration. Have a great weekend. Many thanks.